Welcome to the Opening Bell Report.
It genuinely stopped me in my tracks. 90%. Specifically, this claim in the analysis report we're looking at, that a certain company might be 90% undervalued right now.
Yeah, and that should set off alarm bells for anyone.
Totally. My skepticism meter just, goes through the roof. In an efficient market, you're not supposed to find billion-dollar bills just lying on the sidewalk.
You're not. So your first question has to be, is this a classic value trap?
Exactly. Is this thing cheap because it's actually going to zero?
That is the healthy reaction. But that tension is exactly why we're digging into this today. We're breaking down an analysis report on Critical Metals Core, ticker is CRML.
Right, the Tanbreez valuation thesis, as they call it.
And the core mystery we're trying to solve is pretty simple. You've got a company trading at what? About a $1.27 billion market cap?
Not small change.
Not at all. But the report argues it's sitting on an asset that's potentially worth $3, maybe even $6 billion.
So that implies an upside of, anywhere from 136% to almost 370%. It's a massive gap.
A huge gap. And the mission today is to figure out if the market is just blind or if there's a giant red flag that we're all missing.
And I think it's important to say up front, this isn't just a story about stock charts. This is, it's about Greenland, it's about rare earth elements, and it's about the West trying to break a really serious geopolitical choke point.
It's arguably one of the most significant strategic resource stories in the North Atlantic right now.
Okay, so let's start with the asset itself. The report calls it the crown jewel, Tanbreez. What is this thing in Greenland?
Tanbreez is, well, the report calls it a geological anomaly. And I don't think that's an exaggeration. We're talking about one of the largest rare earth deposits in the world.
I saw the number. 4.7 billion tons of ore. That just sounds, how is that even manageable?
Right. Volume is vanity, profit is sanity, as they say in mining. A giant rock with low-grade ore is just a very expensive construction project.
So what makes this different?
It's the composition. It's not just one thing. It's what they call a polymetallic deposit. So You've got zirconium, niobium, tantalum, and the rare earths all in one place.
Okay, let's drill down on rare earths, because we hear that term all the time, but the report makes a really sharp distinction that I think a lot of people miss. It says Tanbreez is fundamentally different from a company like MP Materials.
This is the absolute key to the whole thing, the technical differentiator. Most deposits, like MP's Mountain Pass, are rich in what we call light rare earths.
Right.
Things like lanthanum and cerium. They're useful for, glass polishing, catalytic converters, stuff like that. But Tanbreez is special because something like 27% of its rare earth mix is heavy rare earths.
Okay, heavy versus light. I know we're not talking about physical weight here, so why does that classification matter so much for the valuation?
It all comes down to magnetism and heat. If you're building a high-performance permanent magnet for, say, an EV motor or a wind turbine, that magnet gets really, really hot.
And a standard magnet would just fail.
It would demagnetize. The light rare earths can't handle the high temperatures. To fix that, you have to add in heavy rare earths, specifically dysprosium and terbium. They give the magnet its thermal stability. Without them, high-performance EVs, military guidance systems, they just don't work.
So the light rare earths are like the flour in a cake, but the heavy ones are the yeast. You can't make the product rise without them.
That's a great way to put it. And here is the geopolitical kicker. The supply chain for dysprosium and terbium is, it's almost a total monopoly held by China.
Wow.
The West produces plenty of the light stuff, but for the heavies, we are dangerously exposed.
So Tanbreez isn't just a mine, it's a strategic counterweight. If the Department of Defense wants to secure guidance systems for missiles without asking Beijing for permission,
they need a source like this. And that strategic premium is what the report suggests isn't being priced into the stock at all.
Okay, so the geology checks out. The stuff in the ground is the right stuff. Now let's talk about the money, because this is where the numbers get a little wild.
Let's do it. As we said, CRML is trading around a $1.27 billion market cap.
That's the price the market is putting on the entire company today.
Correct. Now, you look at their preliminary economic assessment, the PEA, and the net present value, or NPV, of just the mine itself, just digging up the rock, is pegged at roughly $3 billion.
So right there, the asset's theoretical value is more than double the stock price. But wait, the report also mentioned a $6 billion number. Where does that come from?
That's what they call the integrated value. So that assumes they don't just mine the ore, but they also build the processing facilities to refine it all the way to metals and oxides.
Whoa, hold on. A $6 billion valuation on a $1 billion company sounds incredible, but processing rare earths is notoriously difficult, right? That's complex chemistry.
It's a huge technical challenge, and you're right to be skeptical. That's a key risk.
So is it even fair to include that $6 billion number? Or is that just a total pipe dream?
The report's argument is that even if you completely ignore the processing upside, just look at the mine, the $3 billion number. You're still trading at a massive discount. The $6 billion is just the blue sky scenario where they become this vertically integrated giant.
I see. So the core thesis works without it, but the processing is the lottery ticket on top.
Precisely. And the economics of the mine itself are, well, startling. The report cites an internal rate of return, an IRR, of 180%.
180. I mean, I'm used to seeing mining projects brag about 25, maybe 30%. 180 sounds almost made up.
It does. It's an exceptional number. But it's driven by that geology we talked about. The deposit is right on the surface, so you're not digging a kilometer down. The strip ratio is incredibly low.
Meaning you don't have to move a ton of waste rock to get to the good stuff.
Exactly. Plus, they have valuable byproducts like zirconium that basically pay for the cost of mining the rare earths. The life of mine revenue is estimated at around $26 billion.
$26 billion. Okay, so we've got a massive deposit of the right stuff, huge strategic importance, and these incredible numbers. Which leads to the big question.
Why is it so cheap?
Yes. Why hasn't a major like Rio Tinto or Glencore just bought them? Why is the market ignoring this?
And this is where we enter what the industry calls the valley of death.
I love that term. It's so dramatic.
It's dramatic because it's where good projects go to die. It's that long period between discovering a world-class asset and actually generating a single dollar of cash flow. Markets hate it.
So what are the specific risks here? What's in the valley for Tanbreez?
Number one is capital expenditure, the CapEx. The report says they need over $500 million just to build the initial mine.
And CRML does not have $500 million in the bank.
No, they don't. And raising that kind of money is the big hurdle. This brings up the risk of dilution.
Right. And for anyone listening, that just means the company has to issue millions of new shares to raise cash. So your slice of the pie gets smaller.
Your slice of the pie shrinks.
Yeah.
Exactly. The market sees that $500 million bill and says, we're going to discount your stock until we see how you're going to pay for this.
And there's the time component, too. The time value of money.
Yes. Production isn't even targeted until 2026, maybe 2027. And a dollar of profit 3 years from now is worth a lot less than a dollar today.
Now, what about the Greenland factor? I remember another big project there, Quantersuit, that was blocked by the government. Why wouldn't Tanbreez just get shut down too?
This is a crucial point in the report. Quantersuit was controversial because it had significant uranium content. There were environmental fears, and the government passed a law banning uranium mining.
And Tanbreez.
Tanbreez has very low uranium. It's well below that legal threshold, and that is why their exploitation license has already been granted.
Wait, it's already granted?
Granted and valid until 2050. It is a massive de-risking event. They aren't asking for permission to mine. They already have the legal right to do it.
So they have the permit and they have the rock. They just need the cash and the construction crew.
And the infrastructure challenge in the Arctic is real, but the report points out something interesting. The location is actually a logistical advantage.
How is being in the Arctic an advantage?
Deep water fjords. The deposit is right near the coast. They can load ore directly onto ships year-round. No need for a 500-kilometer railway. Shipping by sea is the cheapest way to move bulk material.
Okay, that makes sense. Isolated but accessible. So let's pivot. The bull case versus the bear case. If I'm an optimist, how does CRML solve this $500 million problem?
The bull case is all about the white knight scenario, basically government intervention.
You mean like the Department of Defense stepping in?
Potentially. Or the EU. Look at the U.S. Inflation Reduction Act and the EU's Critical Raw Materials Act. They are designed to funnel billions into projects exactly like this one.
So the argument is that the West is so desperate for this stuff that a government will offer grants or low-interest loans to get it built.
Exactly. And if they get, say, a $300 million loan from the government, they don't have to dilute shareholders as much. The risk drops, and the stock should, theoretically, re-rate higher.
And in that bull scenario, what's the price target?
If the stock just trades at 1x its mine NTV, forget the processing upside for a second, the bull case sees a price of around $25 to $30 a share.
Okay, now the bear case. What happens if that government help never shows up?
The bear case is that the government moves too slowly. CRML is forced to raise all that money in the public markets, and they have to issue so many shares that it crushes the stock price for existing holders.
Or commodity prices just fall apart.
That's the other big one. That entire $3 billion valuation depends on the price of dysprosium and terbium staying high. If China floods the market to kill off competition.
Which they've done before.
Yes. If that happens, that NPV can evaporate pretty quickly.
So we have this massive asset facing a huge funding hurdle. What's the final verdict from the analysts who wrote this report?
As of their February 2026 update, the consensus is a strong buy.
So they're putting their reputation on the line.
They are. They acknowledge the risk is very high, but they argue the asymmetry, The potential reward versus the risk is just too good to ignore.
And where do they see the price going?
Well, the price at the time of the report is around $10.73. Their average target is $20.40.
Almost a double.
And their high target is over $32 a share, but that's contingent on successful funding.
Yeah.
So they're saying it's a high-risk, high-reward play, and that the 90% undervalued claim is mathematically credible if they execute.
It all comes down to execution.
It always does in mining.
So before we wrap, let's just zoom out. For you listening, why does this story about a frozen rock in Greenland actually matter?
Because the modern world runs on this stuff. The entire transition to an electrified, automated future depends on high-strength permanent magnets, period.
And right now, the supply chain for those magnets runs through a single geopolitical rival. It's a massive bottleneck.
It's a choke point, and Tanbreez is one of the very few viable options the West has to break that monopoly.
So I want to leave you with a final thought to chew on. We've talked about the valuation gap and the funding risk, but ask yourself this. If the Western world is truly serious about national security, about having a secure supply chain for F-35s and EVs, can they afford not to back a project like Tanbreez?
That's the ultimate question, isn't it? Is this a stock or is it a geopolitical necessity?
And if it becomes a necessity, does the market eventually have to close that valuation gap? It's a fascinating setup. Thanks for diving in with us today.
Always a pleasure.
Don't forget to like, share, and subscribe for more.